go into the content. Alright guys, welcome to another episode of Crypto Corner. As I said, today is a live stream, something that I haven't done in a very long time, and it's mainly because I'm traveling a lot, guys. Anyways, today I'm actually having a very good connection, so I decided to do this live stream with you, and mainly I want to look at charts and exactly what can we expect with Bitcoin. We see that in the last 24 hours, we did have quite a dip. Only a few coins here in my watch list are seeing some positive performance. Smart Mesh is the only one that is really strong today, 23%. Everything else, I mean, there are about 10 coins that are in the green, and that's it. You can see them here. Floki is in the green, Keeper is in the green, ICP, R-Wave is in the green. Interesting. The token of MXC, MEXC exchange is in the green. Ronin and then OTK. OTK is actually in the green, but it's pretty much at the same price as yesterday. Yesterday it was actually pumping. So OTK is probably going to drop very soon because I feel that its pump is pretty much over. Optimism is up, and then Pendo was up yesterday as well. So I feel that today is just lagging. It's still kind of up, but in a few hours time it will probably be in the red as well. And Casper is lower than yesterday, not lower than yesterday. In the last 24 hours it still shows green, but it's actually it was 15 cents yesterday, now it's 14.82, so it's already dropping. So don't expect much of green for the rest of today, and everything else is in the red, as you can see. Now let's just go here according to market cap so that we can see. Bitcoin is 3% down, 64 right now. It went to 62,800. So we are recovering a little bit, but we did drop much lower, and I'm gonna look at the chart in a minute. Ethereum is down as well. Both of them pretty much around 3%. Ethereum slightly more, close to 4% in fact in the last 24 hours. Solana is down 6%, 172 as we speak, not great. XRP is down 5%. And then the other coins here in the top 10 are less than 2%. Cardano is 2%. Link is 4%. Link is on number 12 if we are excluding. Actually, no. Link is at number 10. We do have a couple of coins that came here on the top purely because this coin checkup software that I'm using doesn't really show their market cap. So they're jumping on the top purely because of that, but they're not really in the top. They're much, much lower. So yeah, Link is now number 10, and it's 4% down in the last 24 hours, and I'm expecting that it will be dropping even lower. And why I'm saying that? Well, because I'm expecting that Bitcoin will be actually going lower. But before we look at the chart, first of all, we're seeing a lot of outflows from the ETFs, and this is a major reason why Bitcoin is not able to regain its 65K and 66 and everything. Yesterday, we did have a bit of a pump, and that was during the OFC meeting, FOMC meeting, and for briefly, we saw a good recovery. We saw some positive price action. People were uber bullish and everything. They managed to push it to 66, 60, maybe close to 67,000. That was a very good chance to sell a little bit if you want, if you're doing swing trading, if you're bothered about the short term. This was a good chance to actually do a little bit of selling so that you can lock in some profits or just prepare for another dip. Another dip was inevitable, and I'm gonna look at the chart, so I'm gonna show you why I'm saying that. But we're seeing a lot of outflows from the ETFs, and as Willy Woo says here on Twitter, ETF investors showing that they're actually the noob. On the first dip, ETFs did $1.6 billion of outflows, while the Bitcoin network received 1.1 billion of total net flows. So this means plenty of self-custody investors bought the dip, and I was one of those. But as I saw the pump yesterday, I saw the gain, and now I'm actually quite happy with the dip today because I managed to recoup some of those that I sold yesterday. I still keep some capital in stable coins because I am prepared for future dips, for further downwards price action. We see that the fear and greed index is at 75, so it is in greed, and this is not really a time to be buying yet. I mean, if you're doing swing trading and in the short term you can do some buying, that's perfectly fine, but I feel that we are going to be seeing Bitcoin around this price level for some time, so I'm not really rushing into buying heavily right now. I'm not getting aggressive in my buying. I want us to drop at least here in the middle so that I can start looking into buying more aggressively. I mean, 75 is still high, still high. This is the daily chart of Bitcoin. As you see, we are still here and still going downwards. We still have some more room to be going downwards to get to that support level. We already tested it. So last time we dropped to that level, and last time I was charting Bitcoin, in fact, we were up here. It was a few days ago, and I was charting this level as a stronger support. We were kind of getting close to that 0.618 Fibonacci level, and I was saying that most likely we're going to break this level. So if we do break it, we have a stronger support down here, and down here at 61,400, this is really our stronger support. We tested it, and as we tested it, literally the next day we jumped up. So that was good. That was showing that the support is really strong and it's holding. Now it looks like we're coming again to that level to retest it, and as we retest it, we do have a chance of breaking it, because this is what happens when you retest levels. Every next time you retest a level, there is a higher chance that you can break it. So this is why today I've drawn some further downwards price levels that are support levels. And we do have the 58,157, it shows me here, is the Fibonacci level, but 58,000 is pretty much the next support that we have. And right now, I also want to point out we've done a 16% correction on this market. Now, typically what we do during corrections, and in previous bull markets we've done it many times, we've done 30 to 40% corrections several times in 2017, several times in 2020, only a couple of times, but or 2021 I think, but definitely in a bull market seeing a 30 to 40% correction is not unlikely. However, this time is a little bit different. As I said in my previous analysis, we do have a different market with completely different economic and I mean a lot of different factors. Economic factors very different, but also another factor that makes this market very different is the institutional investors who are happy to scoop as Bitcoin gets cheaper. So even though we saw a lot of outflows during this dip, I do believe that dropping to that lower support at 58,000 is going to get them greedy, and this is why I'm not expecting a much bigger drop. To me, a 20% correction is something that is very likely to happen, and this bull run you can see here in 2023, and a couple of times in fact, and this is the beginning of this year. A couple of times we've done 20% correction, but that's it. We haven't really done 30 to 40% correction. And I do believe that 20% correction is pretty much what we can expect during this bull run. I mean, it's not impossible to make a 30% correction. I feel that 40% is going to be very unlikely. Again, not impossible, but very unlikely. But a 30% correction, at some point I'm expecting that we can do that. However, I don't think that we are ready for that yet, and I feel that a 20% correction, maybe 22%, something like that, is pretty much what we can expect in this market, in this currently in this market climate right now. So I've drawn these two corrections here. First of all, the 16% is the one that we already did, and it looks like we are coming to that level again to retest it. This is the 61,400. This is really the direction right now. If this level doesn't hold us, we do have another support at 58,000, and if we drop to that level, we are printing a 21% correction. This is what I've drawn here. So 21% correction is pretty much aligning with the previous two corrections that we did over this market. So this is really what I'm expecting for us to do. Even though the 60,000 is a psychological support, but it's very close to that 61k, which is the support aligning with the golden ratio here. So if we drop to 61k, 58 is not that far. And it could just be a week, it could be just a brief drop to that 58,000 just to retest that level and see if it's going to hold us. And I feel that it's going to hold us. To me, it makes perfect sense for this level to hold us. You can see that on the daily, we are already in the oversold stochastic RSI, indicating that we are getting ready, for a bounce on the upside. But the simple RSI and the market are still looking bearish. I mean, the simple RSI is still going downwards, still has more room to go downwards before it gets into the oversold region. The markets are going downwards as well. They are starting to get quite apart, which I like. I mean, typically when the markets start going apart, this is a time for us to prepare for a turning of this trend, because at some point they act like magnets. They want to pull together. So as they start falling too far apart, they will start getting closer. One of them, the blue line here in this case, is going to start curving and then getting closer to the red one. So we do have some more time though. I feel that it's not going to be this week, maybe next week at some point, later next week. We'll see how it goes. But this is really what I'm seeing on the daily. Now this is the 3-day chart. The 3-day chart is showing us bearish market. So again, it's not going to be this week yet. We still have more room to actually go downwards. The simple RSI has just come out of the oversold, of the overbought region, dropping down now. So still more room to be going down. At least another week, I'm feeling we have ahead of us before we can think, maybe even a couple of weeks before we can think of turning this trend. And as we go in the higher time frames, things are looking more bearish. Now this is the weekly. On the weekly, we see this cross in the stochastic RSI that has just happened, indicating that we really have another couple of weeks at least of going downwards, so that we can come out of this overbought region and also simple RSI overbought region. We really need to come out of these regions on the weekly. This is why I'm saying that the second drop was expected. You could expect this if you look at the bigger time frames, and you should always zoom out. I know that many people are focusing on the 4-hour chart and the 1-hour chart, and intraday traders are looking at the minutes and all of that. But quite frankly, you have to zoom out so that you can see what's coming out, what you can expect. I mean, the monthly, if we look at the monthly chart, I think it's this one here. Yeah, the monthly chart is definitely not ready for a turning of this trend. Definitely showing us that we are still looking at, well, maybe even another month of bearish price action, because the stochastic and the simple RSI are both in the overbought region. And both of them actually have to drop from this overbought region. And on the monthly, that takes time. So we are not ready. Look at last time we were in the, and of course we can stay in the overbought region for some time, but as we enter this overbought region, this is what happens. Much stronger drops, much bigger drops than where we are currently. So if we are to see a much bigger drop, possibly coming into this orange zone, this orange zone, by the way, is in the 40,000s, 47, 48, which I don't really think we're going to drop all the way there. We are in a bull market after all, and in a bull market the dips don't really go that significant. But getting into the 58,000, maybe even 55,000, which is another support which I didn't draw here, but it's this golden Fibonacci ratio here. 56,000, 55,000, even 53,000. I don't really see 53, but even 53,900, so 54,000. This is the lowest we can go during this correction. And of course, you shouldn't necessarily expect always the worst case scenario, the lowest, but it is a possibility, right? So this is really where we are heading towards. 58,000 to me is the most likely scenario for a retest of a support from where we can bounce. And of course, as we get there, we're going to analyze again, and we're going to see what can we do if, how are we holding this level. This is what I want to see. As we come down here and we start testing this level, I want to see what is the price action. I want to see what are the volumes and how we're going to respond. As you see, as the price is dropping, we are also dropping in volume, which is a bullish indicator. Price going down, volume going down is actually a good confluence here. So this is a bullish indicator. In the shorter term, a bounce on the upside is to be expected. This is the 3-day chart. And if we go on the daily, it's showing the same thing. Price going down, volume going down, and if we actually see a bounce on the upside from here, this will also be a very good indicator, because it will be a higher low, and a higher low is indicating a continuation of the uptrend. So this is really what we are looking for right now. First, we want to see how we're going to respond as we come to retest this support. Are we going to drop all the way to where we dropped previously, or are we going to get stopped earlier? If we get stopped earlier, this is a higher low, and a higher low indicates, bullish momentum. If we drop to the previous support, we want to see if it's going to hold us. Is it going to be just a minor drop, a touch, a wick of a candle, and then going upwards, which is also going to be bullish? Or are we going to break this? So as we are retesting this, I'm not going to be buying yet. I will be waiting to see the confirmation. And a confirmation would be a bounce from this support on the upside. However, if we break this support, as I said, we are going to the lower support, which is currently sitting at 58,000. And of course, we have to watch how we respond to that support. And if that support doesn't hold us, we do have a 56,000 support. So these are the support levels on the way down. On the way up, we have these resistances that were previous support levels. The 0.618 Fibonacci level that used to be a support that we managed to break, which is sitting at 66,000, is now starting to become a resistance. Not a very strong resistance, but a resistance nonetheless. Then we have the 0.50 and the 0.382 Fibonacci levels that were previous support levels. These are now resistance levels, 67,000, 68,900. So, pretty much 69,000. These are the resistance levels on the way up. So these are the main target levels that I'm watching closely to see how we respond, and according to what the price action is at these levels, that will determine what I'm doing, whether I'm selling more as we get up. Like yesterday, we got up here, and as we got into this close to 65,800, pretty much, as I saw a rejection from that price, I was selling. So this is really telling me, the price action is really telling me what I'm going to be doing. And I was selling only for the short, some swing trades. Of course, I wasn't heavily selling, my portfolio or anything like that. I was just selling some Bitcoin, some Ethereum, and a couple of the altcoins that were pumping at the time, because I knew that as Bitcoin drops again, it will drag the rest of the altcoins down. And as you saw today, pretty much everything is red besides 10 coins, and I'm watching here almost 100 coins. So out of 100, only 10 of them are in the green, and everything else is in the red. Maybe 12 of them are in the green, and it's not 100, it's 88. But nonetheless, I mean, as you see, the majority of the coins are in the green, in the red, and only a few of them are in the green. Therefore, and of course, if Bitcoin continues going down, retesting the support level, these will also turn red, because people will be exiting positions, and they will be mainly going into stable coins. But sometimes people are also trading some altcoins directly against Bitcoin, and Bitcoin is usually holding its levels better than altcoins. As you see right now, Bitcoin is showing 119, and no, Bitcoin is 3% down. And if we look at the altcoins, we are seeing 8%, we are seeing 6%, we are seeing 4 and 5 and 8% again. And you know, some of them are also kind of going hand to hand with Bitcoin at 3% or something. But a lot of them, you know, 5%, 6%, 8%, and 7%, a lot of them are doing, you know, bleeding worse than what Bitcoin is doing. Now, talking of altcoins, let's look at Ethereum, because I mean, not many people are considering it an altcoin anymore, but still, Ethereum is bleeding, of course, and it's going to retest again this support that it tested already. Last time it tested it, it managed to break it very briefly. That's the 0.50 Fibonacci level. It managed to break it very briefly. So the question is, are we going to retest this again, and is it going to hold us? And I feel that the retest is already on its way. We have the 50th moving average here acting as a somewhat of a support, but I don't think it's going to hold us. If Bitcoin drops to its support level to retest it, it's lower than that. So I feel that a retest of the 3000 is coming. We're currently at 3,300. A retest of the 3,000 is coming. Maybe 3,100 is where we can get stopped, and if that happens, it will be a bullish indicator, but it's also very likely that we break this level. So last time we dropped to 3057. If we drop to this level again and it holds us, that will be a bullish indicator. It basically marks a double bottom here in the short term, that is. And we do have the golden Fibonacci ratio sitting at 2800. So 2898 is where the golden Fibonacci ratio is sitting right now. Are we going to test this? It's possible. It's very likely, in fact, because as I said, as Bitcoin is dropping lower and Bitcoin seems to be coming down here, it's quite some room from where we are. If Bitcoin drops to that support level again, then of course I'm expecting Ethereum to also drop down here. I mean, to the 3000 at least. But if the 3000 doesn't hold us, we do have the lower support at 2800. We do even have a lower support, which at this point I'm not yet anticipating to see, 2500. I feel that it's very small chance that would drop all the way to the 2500. But I've drawn it because it's there. I mean, it is one of the possible scenarios, not the most likely scenario by any means. But it is. If we look at the bigger time frames, the stochastic RSI on the weekly, as you see, just printed that bearish cross, and the simple RSI has just come out of the overbought region. Both of them are going downwards. Both of them are coming out of the overbought region. This is good, but as you see, they still have more room to be going downwards before we can think of turning this trend. And markets are still to go downwards. They're yet to actually they're curving now, but they're yet to start going downwards. So indicators, the oscillators here are showing us that we can expect further downwards price action. So a retest of the 3000 level is a very likely scenario. This is really what I'm expecting here. This is Ethereum against Bitcoin. And as you see, we are unable to break from this downwards trend line here. We've been going downwards all the way from last year. And as we come to this, you can actually play this very easily if we are trading Ethereum against Bitcoin, because we are really in this range right now, and we are at the lower at the bottom of this range pretty much. But as we come to the top of the range, we get rejected. And as we come to the top of that range, we are actually getting also to that downwards trend line, which we are unable to break. We tried very briefly, and as you saw, literally the next day, we got rejected. This is, this is the weekly. So it's not exactly the next day. We were probably for a few days above this trend line, but definitely still unable to break from this downwards trend line. The only thing for me that would send Ethereum higher and it will manage to break from this trend line is an ETF, probably, because we did have recently we had the upgrade, the latest upgrade that was that not only was supposed, it actually did help with the fees, especially on layer 2s for Ethereum. So it did help, but it didn't really change dramatically, what's happening with Ethereum. And unfortunately, if that was not enough to turn the trend for Ethereum against Bitcoin to really start going into the 0.06 level and perhaps running to 0.07, which is where I really want to see Ethereum. I want it to actually come into this range here and start trending in this range rather than what we are doing right now. Right now, we are between 0.05 and 0.06. As we get close to 0.06, we get rejected, and as we get close to 0.05, we find support. And right now we are 0.052, so we are close to 0.05. We are getting close to entering that sweet spot here, which is the support, and it's a good buy opportunity if you are trading Ethereum against Bitcoin. The problem is that we are coming to test this far more often than we are retesting the top of the range. So the bottom of the range, look at it. We are kind of trading in the bottom of this range far more than the top, which is not good news. This means that every time, I said it already, with every time coming to retest a support, the chances of breaking that support get higher. So this is not good news. Next time we come to retest this support as we enter it, we are in trouble. We could actually break it. I don't think it's not the most likely scenario, but the possibility is there. So we have to be wary of that. And we really have to watch that. Even if you're not trading Ethereum against Bitcoin, you should keep an eye on that, because it could be indicative for the price in fiat value as well. It could mean that Ethereum could drop much more than Bitcoin against the dollar. So that's why in the dollar value, which is this here, I've drawn these lower support levels, because even if Bitcoin just consolidates, if Ethereum against Bitcoin is not able to hold its support, it could actually drop. As Bitcoin is going sideways, Ethereum could actually be going downwards. So that's just something to keep in mind. So this is it, guys. I don't really want to take too much more of your time. I'm gonna keep it short today. I mean, it's not really short, but yeah, this is it. I don't really want to go through too many charts and start going into the altcoins, because this video is gonna get to like 40 minutes, 50 minutes, an hour or something like that, and then it will definitely be too long. So I will go into some altcoins in my next video. Let me know in the comments which altcoins do you want me to chart next, because last time I charted 6 altcoins, I believe 5 or 6, and the ones that I was currently trading and I was currently looking into accumulating. I'm still holding for this. I've accumulated during the dip some of them, but I'm still holding a lot of capital in stable coins, because I'm prepared for future dips, for further dips. And even if we don't see major dips from this point on, it could be that we actually find the support around these levels and we start recovering. But I'm waiting to see a confirmation of this recovery before I really jump in. So this is what I'm doing. Hopefully this is helping you. Of course, this is not a financial advice by any means, but I'm just sharing with you what I'm personally doing, which are the levels that I'm looking at, and hopefully this is helping you make your decisions for you, for your portfolio, for the tokens that you're trading. And of course, Bitcoin is driving the whole market. So if Bitcoin is dropping and if Bitcoin is consolidating, this is also indicative for what we can expect with the altcoins. Actually, consolidation for Bitcoin is the best thing. This is what we want, going sideways, not really having any major volatility. This is when the altcoins are thriving. Why? Because people start allocating capital from Bitcoin into altcoins in the chasing bigger gains, chasing volatility. So in their search for volatility, people are exiting Bitcoin because Bitcoin is going sideways. But that's only when Bitcoin is going sideways. When Bitcoin is doing major drops, they're exiting and going into stable coins. This is why Bitcoin is bleeding and altcoins are bleeding as well. And altcoins are much more volatile than Bitcoin. Therefore, we are bound to see much bigger drops in altcoins. If Bitcoin is to drop even by another 2%, altcoins will be dropping by another 6, 8, 10%. So be prepared for this. Watch closely what is the price action, and always remember to keep some capital in stable coins, ready for these kind of market moves, ready for the dips, because when you see a dip, you have to be able to take this chance. because this is really how you make the money. You need to be able to take advantage of these market swings. If you are bothered about the market swings, I know that many of you guys in my audience are just investors and you're looking into the longer term and you're not really bothered about the short-term swings. This is fine. Longer term, nothing has changed. Longer term, we are maintaining our bullish outlook. We are still in a very strong bull run. This right now is the pre-halving drop, and every time before the halving we see drops. I don't really have the chart ready open for me to show you, but I've done it in the previous videos and I can do it in the next video if you need me to. We have done before every halving, we do have a market cool down. First of all, we have in the run-up, we have a pump, a period of people buying, accumulating frantically, and then we're having a cooling off period, which is right now. This is the cooling off period, and then after the halving, the cooling off period continues because a lot of the traders have sold the news and they are accumulating. So we are entering the accumulation stage, which is these drops. These are the drops that are giving us a very good opportunity to reaccumulate whatever we've sold during the strong bull run that we had over the last couple of months. And this will most likely last for a good month. In fact, I'm expecting, I did say a couple of weeks at least, but in fact it could be 4 to 6, maybe even 8 weeks of accumulation period before we see another strong rally on the upside. So you have to be prepared for that. With this is everything for today's episode. I do have some links in the description below where you can find the links to my newsletter. So if you're not yet subscribed, you can subscribe to my newsletter. It's once a month. Sometimes I do twice a month when there's a lot of market moves and things to discuss. But definitely I'm not spamming you with my emails. It's not every other day or anything like that. And I'm doing analysis of the markets and things that don't really make it into the videos. So it's different content in these newsletters than what you will see here in the videos. And also some other links, some free ebooks and things that I've got that will help you with your charting and everything. So make sure to check out the links in the description below. This is everything from me. I'm signing off and I'm gonna see you in the next one.